tell us about your trip.
Okay.
So.
Well, let me say I had a very nice time on my trip, but
Nice.
I'm so glad to be home. You know, I have a new appreciation for all of the infrastructure and
What do you mean?
governmental services that we have in this country.
Governmental services.
Well, yes, like our
Like what?
our comparatively clean mass transportation system, our highly organized traffic. You know, people don't drive on the curb or the wrong side of the road.
I can imagine. Wish I would have had a camera in the car for those trips.
Yeah, all that stuff. Anyways, listen, I have some great information for people that already own a home, that are paying their mortgage and very resentful about the fact that they have good credit, can document their income, they were not part of this whole mess that's caused this real estate collapse, and would love to refinance into these low, great interest rates we have, but they can't because of the bubble. Now they either don't have enough equity to qualify, or they have a little bit of equity, but they fall into that mortgage insurance category. So there are programs for you. We're going to post the underwriting guidelines here. They're a little complicated, so I'm sure you're going to have questions. So just call the office and we'll qualify you. Fannie Mae and Freddie Mac rolled out these awesome programs that if you don't have mortgage insurance now, even if you are at 100% of the value of your home or over, you can still qualify to get really today's great low rates.
So people that are upside down
Yes,
qualify.
up to 105% financing based on the first mortgage alone.
Wow.
So, I mean, you could be 150% financing. As long as you have, well, minimum credit score is 620 but to qualify, but ideally, to get the best rate, you want to have a 740 or above FICO. But if you're anywhere in that 620 and above, you do qualify. There are pricing adjustments for people that have below a 740 score. They're small if you're in the 700s and above, but obviously the lower your score, the more the pricing incentive hits are. But it's a really great program.
So if somebody has a first mortgage,
Mm-hmm.
and what if they have a second mortgage, and it pushes them well over the 100% mark? What happens?
It doesn't matter. They're only factoring what you owe on the first mortgage into the loan. So you can have unlimited loan to value to get the program with subordinate financing. As long as the first mortgage is at 105% of the appraised value, current appraised value or less, then you qualify. And you can fully document your income and you have at least a 620 FICO, then you qualify for the program.
So the government is stepping in now to help the people that
Well, government-sponsored
have good
enterprises,
credit
GSEs,
and
Fannie
not
and Freddie.
behind on their mortgage. And,
Yes.
Okay, because I mean, for the longest time now, when people would go to their lender and the lender would say, well, you're current on your mortgage, so we can't help you.
Right.
And they make them default on their mortgage before they help them, which I don't agree with. I think that's wrong.
Yeah,
But,
I mean,
so-
there's a
well,
lot
that's
of people
good. They're
that fall
stepping
into
up to
this
the plate.
category that
Yeah.
have good credit, that are not interested in pursuing a modification, that just would like to refinance to get a better rate. So this program is for you. Now, it's only for people that have Fannie or Freddie loans, which we will determine the servicing when you call. I have a website I can go to, or you can actually call your servicer, the person that's sending you your bill every month, and ask them if your loan is owned by Fannie Mae or Freddie Mac. The government is going to sponsor some incentives to induce other lenders, private Wall Street firms, to participate in this program. So I think this rolls out, by the way, April 1st. I think that a lot of lenders are going to come on board at a later point in this year. So
They're going to let Fannie
if you don't
Freddie
have Fannie or
experiment,
Freddie
yeah.
now, have no fear. I think that this is going to be rolled out by a lot of lenders. Also,
My hip. Anyway, sorry. Back to good
the
stuff.
Home Affordable Modification Program guidelines were just released, and the program is going to be released officially was released March 4th, excuse me. This is a new modification program. We're going to also post that here so that you'll have the details for that program. But that is a very good program. It's for people that are having a provable hardship, and it lowers your total expenses to 31% of your gross income, which, if you're having a tough time making your mortgage payment, obviously it's much more than 30% of your gross income. So again, it's very 18-page guidelines. We'll post them here. You can call the office if you have questions. We're here to help you. Let's see, what else? Oh, if you have not owned a home in the last 3 years, or if you've never bought a home before and you want to buy a home, that whole tax thing we were talking about,
Nice.
the tax
The
refund.
tax credit from the IRS.
Right. Well, they now, for January 1st, 2009 to December 1st, 2009, they rolled out a new program. It's $8,000 or 10% of the purchase price, and it's not an interest-free loan. It's actually in the form of a tax rebate. But
Well, we had a client in last night.
Yeah.
We were coming in to qualify them for financing and then get them dialed in for real estate once they qualified. And I overheard them say that they hadn't filed their 08 taxes yet. So when I told them, don't file till we have a house, because now if you get $500 back, you're going to get $8,500 back. Did you see the look on their face?
oh yeah,
They
they
were
were
elated.
flabbergasted. Other than that, unemployment in the U.S. is there's 5.32 million people receiving unemployment benefits right now. In
Wow.
California, the unemployment rate is 10.10%.
You called it again.
Yeah, I
2
mean,
months
I was
ago,
saying
you said
double
we were
digits.
gonna double
So
digits,
yeah,
so-
but here's the thing. I think that the worst of it's behind us. I'm not saying that numbers are going to continue to get worse, but not by much more. I think we're
rounding the
near-
corner.
Yeah, we're near
Yeah.
the end of the plummeting market, and
It's not a sharp corner of the
stock market's
recovery.
been
We're
rallying.
getting
The
around
Dow's
it.
up over 7,000.
That was nice.
So,
3 days of rallying today?
right.
Been watching the market. So 29,458 new and resale homes sold last month in California. And hotbeds, which I think every week I'm going to talk about what is a hotbed. What I say by hotbed is somewhere in the Sacramento market there's a flurry of purchases going on. And one of those areas is Citrus Heights right now. Condo communities, there's a lot of condo and townhome communities in Citrus Heights. People are just buying them up because they're really affordable. They're all under 100,000. Well, most of them, I should say, are under 100,000 right now. Antelope was a good hotbed over the last couple of months, but I'm seeing
Yeah.
a lot of activity in Citrus Heights right now. And what I want to talk about is short sales. And the reason I want to talk about short sales real quick is last night when we had our clients in and they were asking about short sales, and I hear this a lot, is people have this impression that a short sale means that the sale is going to happen in a short amount of time. That's not the case.
No.
What a short
It's an
sale
extra
is,
long time.
it's an extra long time. Let me tell you. What a short sale is the lender is going to approve you or the seller to sell your house short of what is owed on it. Hence, short sale. So let's say a seller is in a mortgage for $300,000 and the house is only worth $150,000. They'll put it on the market as a short sale. We'll get offers on it. I have to submit it to the lender, and the lender has to approve selling it for $150,000 and writing off that $50,000 as bad debt. So it is a long process. From start to finish, could take anywhere from 3 months to 6 months. It's a very long process because the lender collects up all these offers on the houses and then takes the best and highest offer. And so you could wait 3 months to get a no, or wait 3 months and get no answer at all. Now, do I say don't go short sales? No, go short sales because, hey, there's some really good deals out there. If you have the patience and you're willing to do this and put in the long run, let's go short sales. But if you're not, if you don't have the patience...
The bank-owned ones go pretty quick.
Yeah, the bank-owned ones, 30-day escrows on those. We're looking right now on timelines from start of the search process and getting clients qualified to going into escrow within 90 days. So it's a fascinating, interesting market. My hips.
I know, I'm sorry, I have a visual of that.
I totally
I have a visual of your last trip. He was jealous. See, I went on vacation, so he had to go take a trip too.
Yeah, a trip straight down there. So anyway, thanks for watching the show, and don't forget, guess where we're at. We're getting ready to go somewhere right now. And what is today? Today's
We're
Thursday.
going somewhere, hopefully not where he just went.
Anyways, thanks. Where's Kevin? He's on the floor. Anyways, so guess where we're at, and we're going to give you guys until, because it's Thursday, till midnight, 11:59 p.m. Sunday night to guess where I get the email to me, and you get $10. That's coffee money.
Woo!
Get out of here. Bye. Okay.
Okay.
So guess where we're at. You guys know the routine.
Where are we?
Send us a vid by 11:59 p.m. Sunday night. Email it to me, and you win $10. There's no limit to how many times you can win. Thanks for watching.
Woohoo!
Bye. I can't turn it off.